Welcome. It is Monday. How is everybody doing? Hopefully everyone had a fantastic weekend. I'm still in St. Louis. I had my family reunion over the weekend, and it was awesome, man. I got to see all my siblings. We don't get together that often, so got to see all my brothers and sisters and my nieces and nephews. Got out, did some water skiing. It was a great time, but a lot also has been taking place in the market. I wasn't on Friday, so we're going to cover what happened with the job market, what happened with the Bureau of Labor Statistics, a lot of drama there. Nothing new, though. We're used to the drama at this point, as well as what happened with markets. And markets are kind of rebounding right now. And what can we expect from the Fed, as well as what's going on with DePIN. And there is a few projects that were highlighted on Nasdaq today. So that's pretty cool. So we're going to cover that as well. All good things, though. All good things. Hopefully everyone had a fantastic weekend. I got out and golfed yesterday. Had my best personal round ever, which wasn't amazing. I shot 83. I'm not like a professional by any means, but it was pretty damn good. I was pretty proud of that. Let's kick off with a couple of fun news reports. This story was about a robotic surgery done, heart surgery, that was done where they didn't actually have to open up the chest and spread the breastbone. So it's pretty huge development on the surgical field. So they used a surgical robot using small, precise incisions. They eliminated the need to open up the chest to break the breastbone. They were able to remove the diseased heart, and a new heart was implanted through the peritoneal space, is how I guess you would say that, avoiding chest incisions. So that was pretty cool. Went on to say that this robotic heart transplantation represents a remarkable giant step forward in making even the most complex surgery safer, and we are delighted to offer this great success to the world. So pretty cool stuff there. What's up, CB? How's it going? Pretty cool. All right. There was some other news that dropped last week, and it was regarding Google. So they were actually indexing conversations with ChatGPT that users had sent to friends, families, and colleagues, and it was turning private exchanges intended for small groups into search results visible to millions on Google. So it was part of this site search using part of the link that was created when someone proactively clicked share on ChatGPT. I was able to uncover conversations where people had revealed deeply personal details. I went on to talk about some of the details, some of the things that they had that were leaked. It said that while the users' identities aren't shown by ChatGPT, some potentially identify themselves by sharing highly specific personal information during the chats. Google has since removed this feature, so it's no longer searchable. But I think there was like a period of months where people were able to actually search people's personal conversations on Google. So that's pretty wild stuff. Obviously, it got in the news. Some people caught wind of it, and Google did decide to discontinue that feature. What's up, Jay Soto Gaming? Hopefully you're having a great day, man. All right, there's some other news that came out today. Actually, this is over the weekend. So there's been a lot of funding cuts to the government. In particular, says that NPR and PBS are going to be getting shut down. I think in September is when it's happening. Said that it began winding down its operations after its funding was eliminated by the Trump administration and Congress. CPB is a private nonprofit founded in 1967 that serves as a steward of funding for public media. It says that it does fund 1,500 local public radio and TV stations, as well as PBS and NPR, and employs about 100 people. So obviously, like from a job standpoint, it's not like a huge deal with 100 people, but did go to say that in June, the House approved a White House request to claw back $1.1 billion in already appointed federal funds to the CPB, and that it will be eliminated for the first time in over 50 years. Said that told employees that a majority of the staff positions would conclude at the fiscal year. So the fiscal year for the government ends September 30th. There'd be a small transition team that would stay on through 2026. One of the main things here is that they were getting a lot of tax revenue to fund them, to the tune of like, I think $500 million a year, somewhere in that range, I believe is what I read. and that they were accused of being very biased. And really, you know, if you look at NPR, I think like 87% of people that listen to NPR are left-leaning. But they did try to fight against that and say, hey, we aren't biased. But I guess the argument was, if you're going to get government funding and you can't get funding from the private sector and you're using tax revenue, you shouldn't be biased. Either way, the concern that they've raised really is that public radio, public television are a critical part of emergency response plans of nearly half of the states in this nation, and particularly rural areas, so that these types of emergency alerting goes away. You will have fewer outlets to be able to respond in real time to future natural disasters. So I imagine this will certainly be coming up in the news with future natural disasters. We see that a lot of that's been politicized from both sides, let's be real, unfortunately. But I imagine this will be something that we will see in the news coming up. Another way for people to politicize things, which seems to be the trend in this country. Let's see here. Let's see what comments we have where I jump to the next story. Da Vinci robots are amazing, significantly reduces inpatient stays. Yeah, hell yeah. That's one of the things I'm most excited about with AI, with robotics, is in the medical field. Like, the amount of breakthroughs we're going to have is going to be freaking awesome, man. Like, I'm super excited about that. I know there's also like downside risk to AI, and I know people are concerned about it, but I do think from the medical side of things, I think there's a lot to be excited about. There's a news story that came out this morning, said that the U.S. could require up to $15,000 bonds for some tourist visas under a pilot program. Essentially, this is in an effort to get people to not overstay their visas, which I guess has been a big problem. It says that it could require bonds of up to $15,000 for some tourist and business visas under a pilot program launching in 2 weeks. An effort to crack down on visitors who overstay their visas. So I just said that. It says that it gives the U.S. consular officers the discretion to impose bonds on visitors from countries with high rates of visa overstays, and that it could be applied to people coming from countries where screening and vetting information is deemed insufficient. It goes on to say that they have the option of $5,000, $10,000, or $15,000, but they expect that most will be require at least $10,000. A similar program, I thought this was interesting, was launched in November 2020 during Trump's last term, but it was not fully implemented because COVID hit and people weren't traveling anyway at that time. And it did talk about this, that numerous countries in Africa had high overstay rates, in that many countries targeted by Trump's travel ban, so they had a recent travel ban, have higher rates of visa overstays. So they called out some in particular, and it got me interested. It's like, which countries are on that travel ban? So right now, as of like June, I believe, they put this into effect June 9th, 19 specific countries have travel bans. You have these 12 listed here are total bans, entry bans, and then you have partial bans from these other 7 countries here. So I actually wasn't even aware that we had that big of a travel ban in place right now. But you know, this whole bond situation is really to get people to not overstay their visas. So we'll see if it works. It sounds like they're going to try it out for a period of time. All right, let's talk about some tariff stuff. There's only a couple updates here. The EU announced just a couple hours ago that they're going to delay their tariffs they're planning to hit the U.S. back with for 6 months as trade talks continue. This is obviously a big deal. We do a lot of trade with the EU. It said they announced Monday a suspend for 6 months as planned countermeasures. So they're going to hit us back, which were set to take effect this week. So they are going to suspend that 6 months, give us some more time to negotiate. The same is not true of Russia, though. Russia got hit pretty hard by Trump this weekend. Basically, he came out and said he's pissed off because they're buying oil from Russia. So India has been buying a lot of Russian oil. They're selling in the open market for big profits. And they're saying that this is funding a lot of Russia's war efforts. So Trump's coming out and saying, hey, we're going to hammer India with really high tariffs. And they continue to buy oil from Russia is the threat there. And of course, that has a big implication potentially on Apple. Apple has been shifting to get around the China tariffs. They've been shifting a lot of their manufacturing of iPhones over to India. In fact, it said that in Q2, the majority of iPhones were manufactured in India, no longer in China or other countries. So they've shifted pretty hard over to manufacturing in India, in their iPhones in particular. It did say that smartphones, computers, and other electronics are exempted from the reciprocal tariffs for now, but that might not remain the same in the future. And it does look like they got hit with 800 million in tariff costs for June for Q2. They're expecting, and this is Apple, expecting $1.1 billion in tariff costs to hit for Q3. Trump has made it pretty clear, by the way, that he's like not happy with Apple manufacturing outside of the U.S. Like he's really pushing Apple to move manufacturing to the U.S. But their estimates right now that the cost of an iPhone, if it is manufactured fully in the U.S., could be as much as like $3,500 per phone. So I don't know that it's viable. Of course, that's the reports. Maybe they can find a way to be more efficient than that. I don't know, but this is why Apple in particular is the reason why we really need to keep a close eye on the India tariff situation. Obviously, Apple is a top 3 most valuable company in the world. It's valued at over $3 trillion. But there's one other company I want to call out on this list, and that's Nvidia. This is freaking nuts. So obviously $4.374 trillion. We talk about Nvidia a lot, the most valuable company in the world. But what was crazy to me is that it has been a huge wealth generator for their employees. It says that 78% of Nvidia employees are now millionaires, and 1 in 2, so over 50%, is worth over $25 million because the stock has done so well. So shit, man. Hindsight, go and work for Nvidia back in the day, or just buy some Nvidia stock back in the day. It's been one of the top performers, not the best top performing stock, really over the last 15 years or so. But it's not all great for all employees. And this is what came out last week, and what caused the major sell-off was the revision in the job market numbers. And this is something I talk about almost every day, is how, let's be real, the job market's not as strong as what they've been saying. A lot of the numbers are bullshit. And this is nothing new. Now, I will say the size of the revisions and how drastic they are in this last revision, that is new. But we've seen something like, I think in Biden's in his presidency, 21 out of 23 job reports were revised downward. So we've been seeing downward revisions for some time. This revision was massive, though. And by the way, it said they added 73,000 jobs in July. What are the chances that gets revised down? 100%. I would be absolutely astonished if that 73,000 doesn't end up being flat, possibly negative, once they revise the numbers downward. But May and June revised down by 258,000 jobs. And that's the worst we've seen really since 2020. So went from 144,000 net gain in May down to 19,000. In June went from 147,000 to just 14,000. So really horrible job numbers, really, for those months. It says that the downward revision is the worst that we've seen in June since December of 2020, that we saw in June, rather. So the job market is slowing down a lot, guys. And this is something that, on the streams I've been covering, like the amount of companies that are laying people off and saying like the job numbers don't make sense. We've seen these downward revisions. This shouldn't be a shock to anyone. And it seemed to actually maybe be a shock to Trump, because needless to say, he was not happy. And he sent this tweet out basically saying these job numbers are being produced by a Biden appointee, the Commissioner of Labor Statistics, who faked the job numbers before the election to try and boost Kamala's chance of victory. He said that this is the same group that overestimated jobs by 818,000, which is true. We covered this story. This is about a year ago now. And then right again before the election. And then he said, I've directed my team to fire this person immediately and she replaced with someone much more competent and qualified. Okay, so this has not been received very well. And even like a lot of Trump supporters are like, bro, you can't just like fire someone because you don't like the numbers. And really, this shouldn't be a surprise. Like he should know, and he probably did know, I would assume, that these numbers have been revised down for some time. In fact, like here's the article that I covered back last August. Yeah, there are 818,000 jobs revised downward. A lot of times the revisions don't get in the news though. The news generally just covers the original job report. They tend to kind of let the revisions kind of fly below the radar, I guess, because they don't want to draw attention to it. But in this case, like this was such a big revision downward. Jerome Powell kind of has to cut rates because the Fed they have a dual mandate. Number one is making sure the job market's strong. Number two is price stability. And we've been saying this for months now. If he has to choose between the two, and he's hinted at potentially having to choose between the two, I would bet they're going to choose the job market over inflation all day. And if that means lowering rates and inflation coming back to save jobs and save the market, I think they're going to go that route. And I think it's actually really ironic because, Trump goes off, fires this woman who is actually now giving him the numbers that he needs for Jerome Powell to lower rates, which is what, Trump's been yelling at Jerome Powell for months. So the woman that finally gives him the numbers that he's asking for, now he goes and fires her. It's just like kind of crazy. But let's be real. I mean, if you or I were that bad at our jobs, and maybe it's not her fault. Maybe it is that they have lagging data coming in, whatever. And they're just reporting the data that's coming in, but something needs to change. The revision shouldn't be that bad. But I don't think it was a good look for him to just fire her on the spot because he's pissed off about the numbers coming in. It's like, okay, you're going to replace someone, that's going to give us the numbers that you want them to give? Like that's not how this works. Like these should be like factual statistics. They shouldn't just be numbers that you want to make up. But to further reinforce what I'm talking about here, look at the chance of a rate cut in September following those job reports. They shot up. I mean, we were sitting at almost 80% chance in September. We were about 50-50 leading into those job reports coming out. So I would say it's clear now that Jerome Powell is very likely going to be dropping rates in September. And it's really interesting because that 818,000 revision last August, if you remember what happened there, we saw a rate cut from the Fed right after that in September. We saw another rate cut in October and December. So if that's any indication, in this last revision down, I think if we see July revised down, which I think is very likely, I would imagine that September is going to be a time to cut rates. Now, is Jerome Powell too late? I sure hope not. But it is, you got to think, the economy is a giant ship. Once you raise rates, it takes a while to get it turned. You can't just turn it back. And we are going into some pretty treacherous waters here, I think. And it is a reason to have pause, really. Now, I still think we can run in August and September, but I'm a little bit concerned about where we go from there. If you look at the 30-year Treasury, huge drop as well. Now, a part of that might be because they're expecting the Fed rate to drop, but I think a lot of it was that the stock market dropped out due to the weak job reports, and I think it caused people to move money out of the market into a safe haven like Treasuries. And I think that's really what drove the yield down more than anything, because the Fed cutting rates does not mean that the 30-year rate is going to go down. In fact, we saw the opposite last year. So I think this is more an indication of, hey, people are getting a little bit concerned about the stock market being overvalued. We're going to see that, these job reports coming through. I think we've been in a recession, frankly. And that's going to trickle through eventually to the bottom line on these companies. Once people and consumer spending starts to really drop off a cliff, and we're seeing it slow already, but that is not good, obviously. And then you look at the other thing we need to keep an eye on is the Japan 40-year. It has not dropped that much. We need to see this drop more. If that continues to jump upward, that could be a really big problem if that starts to unwind like we saw last August. So always got to keep an eye on Japan Treasury market, obviously. Now, the things we need to be keeping an eye on, there's really two main events coming up I want to call out. The first is, I believe this is next Tuesday. This is when the new CPI numbers come out. So August 12th at 8:30 a.m. That is the next inflation report that will come in July's inflation. If that starts to tick upward a bunch, that's going to put Jerome Powell in a really tough position in September. Now, if we see CPI stay flat or even drop, which I don't know that's what we're going to see because tariffs are starting to have their impact, but the CPI numbers are going to have definitely a big impact on what happens with markets. So keep an eye on that. We'll talk about it next Tuesday. And the other thing is this upcoming August economic policy meeting in Jackson Hole, Wyoming, where Jerome Powell is going to be. So August 21st to August 23rd. I think this is going to be really, really big to see what Jerome Powell says, because this is the next insight we're going to get from him. He didn't give us a ton of details in the FOMC meeting. I guess that was 2 weeks ago now. But I think we're going to learn a lot in this Jackson Hole meeting, August 21st through 23rd. And the markets will likely very much react to whatever he says at that meeting. So those are the two ones to keep an eye on. Next Tuesday, CPI reading, and then third week of August, this economic policy meeting with Jerome Powell. And then I would expect, as of right now, for sure that we'll see rate cuts in September. I don't know if that's going to be bullish, though, because you start seeing rate cuts in many cases, and you look at this historically, that means the economy is breaking. They have to cut rates. It's not because they want to. It's because they have to, and they're being forced to. And I think there is a chance that this ends up being a buy the rumor, sell the news event when they finally do cut rates, that we could see a sell-off. Because I think the markets have kind of been rallying to an extent, thinking, hey, we're going to have all these rate cuts coming up. It's like, yeah, but rate cuts don't necessarily mean good things. That means the economy is faltering. So we'll have to wait and see how that plays out. It also happens to coincide, though, that September meeting coincides with global liquidity, which is very strongly correlated with Bitcoin, drops right at the same time. So I think all that could come together to where we could see possibly a rally in August and September, and then leading up to the FOMC meeting. I wouldn't be surprised if we have a bit of a sell-off there, but obviously don't have a crystal ball. We have to see. Things change so much on a daily basis. We have to kind of see how this all plays out. All right. Let's see here. All right. My name looks better. J Soda BTC. Nice. I think lower interest rates could hurt crypto. I think in the short term it could. Again, I don't think it's the effect of the matter of the interest rates necessarily. It's more so like, hey, they're cutting rates for a reason. It's because things aren't good in the economy right now. Not to mention, if we do cut rates in the 10 and 30 year don't drop and end up going upward, I think people are going to freak out. Even though the Fed lost control of the bond market a while ago, this is nothing new. I think a lot of people are expecting it to like save the real estate markets and really have this huge impact and save the day. And I just don't. I'm not buying it right now. There's no reason for us to think that all of a sudden the 10 and 30 year are going to like drop because the Fed cuts rates. They cut rates by a full % last year, and those yields went upward. So what's changed since then? If anything, things have gotten worse. And obviously now with the Fed rate, if they do cut it, like, could that lead to more inflation? Could the tariffs lead to more inflation? We don't really know. Actually, I'm going to play a video here that's kind of an interesting insight on that. Can you guys hear the crickets in the background? I assume those are crickets. I don't know what those are. Da Vinci robot is a surgical robot. The doctor is in a booth with controllers doing the surgery. It's pretty slick. It can be minimally invasive. Yeah, it's freaking awesome, man. I'm like super stoked to see the different medical advancements that are coming. It's gonna be awesome. And then think about quantum computing. You add that on top, and really, you look at Dynex. What Dynex is doing is really, I think it's going to be really big. And I've covered Dynex quite a bit. It's still super low market cap. I mean, it's been pumping. It's up over 100% over the last month since I covered it on my overview. But they are allowing, they basically found a way to run models faster. So if you're like developing pharmaceuticals, you can develop drugs way faster, way more efficiently. So when you start to look at like what quantum computing can do with robotics, with AI, I think we're going to see like crazy medical breakthroughs for sure. Both parties, Congress, or tyranny, they hate our Constitution, liberty, sound, and money. Therefore, I'm all in on gold. Hell yeah, man. Can't go wrong with gold. Can't go wrong with gold. I'm looking to add more gold too. You know, I was looking back in 2008 when we had the last financial crisis, because I think we're going to have a drop like that at some point during Trump's presidency. I don't know how soon it's going to happen. I think it'll be a quick recovery because I think they'll print a shit ton of money to get us out of it. But you know, that's just a better case for gold and Bitcoin, right? Because that's the only way we keep this train going is when we have crashes to print more money and push liquidity into markets, which causes inflation, right? So to me, gold and Bitcoin are the absolute easiest long-term plays. And I think at some point in our lifetime, we will see this happen where someone decides to back their currency with gold again. You know, and you see some of the countries that are buying up gold. Look at what China's doing. China's buying a ton of gold. So somebody's eventually going to have to, and try to save fiat, they're going to have to try to back it with gold again and or Bitcoin. So, man, I agree. I agree with this completely. I wish we had a relevant third party, really. Maybe someday. Maybe someday. Probably not, though. The powers that be do not want a relevant third party. They put plenty of measures in place to prevent it. But we saw Bitcoin drop over the weekend. You know, we got down all the way to 112,000. We bounced off support really hard there, though. And you know, there's some people calling for lower, saying that this is just kind of a dead cat bounce, and then we got a lot lower to go. I just find that hard to believe with all the institutional buying that's taking place right now. I just find that really hard to believe, but I don't know. It wouldn't be the first time. You know, Bitcoin is volatile. There's no doubt about that. That's the one thing that gold has over Bitcoin at this point is like, hey, there's less volatility. But at the same time, like, I don't know. I do find it hard to believe. You also have to think, like, some of the oldest Bitcoin holders, that person that had 80,000 Bitcoin sold all of it. Like, do they know something? Do they know something that's coming? I don't know. But Bitcoin does seem to be holding strong still at just under $115,000. If you look at Bitcoin dominance, sitting at 61% here. It had ticked back up, coming back down. Obviously, this is really what we need to see for alt season. I have to say, though, like, I think I talked about this last week. I think we're going to have to change the way we look at Bitcoin dominance, because with the stablecoin bill, we're going to have all these banks and all these institutions like putting stablecoins into circulation, but it's not the same way that stablecoins were used in the past, where people would get into stablecoins to buy altcoins and buy Bitcoin. Now it's going to be actually a mechanism for purchases, you know, a regular mechanism within our financial rails. So I don't know that, you know, including stablecoins in Bitcoin dominance is going to be as clear of an indicator of alt season anymore. So I think we kind of need to remove stablecoins pretty soon here. But it is good to see that Bitcoin dominance is trending downward again. Okay, so this is the clip I want to play, and actually, really all 4 minutes of this is worth listening to. So I'm going to go ahead and mute myself on here.
Actually, be slowing a little bit. Last week, the markets definitely retrenched. You know, you've been solidly bullish since, you know, Liberation Day. But last week was a setback, and August is not always a great month. You think we get a little bit of choppiness here? Are you still bullish?
Well, last week was definitely consolidation, because we had 5 days where the market opened higher and closed lower.
Really?
And they call that bearish engulfing. It makes sense because we're consolidating that 28% gain from the April lows. And on the job stuff, I think it's just the data's catching up to what we already know. The labor market's been soft, right? So it's, I think, a positive setup, because now the Fed has more ammunition to make a dovish pivot in the fall. And it's not too late, because we know the thing that they're going to stimulate is the housing market. And you had a couple guests earlier talking about that. And so that is what strengthens the economy in 2026. So I think it's quite a positive setup. We're just consolidating, and then we make a bigger move higher.
Is it fair to say that since it's a dual mandate, that maybe the Fed should have been able to.
I'm not convinced that 2026 is going to be the year of the real estate market. I've seen a lot of analysts that are calling for 2027. The problem is has been a supply issue, but I mean, yes, rates, but the Fed cutting rates does not necessarily mean that the 30-year rate is going to come down. So I don't know that the real estate market is going to all of a sudden be saved. And I think we also need to consider the fact that if we see a 20% drop in the real estate market, that could be bad. There's a lot of people who the vast majority of their net worth is tied up in their real estate. So if all of a sudden they feel like, oh shit, I just lost 20% of my net worth, do you think they're going to be going out and spending a bunch of money? I just don't see it. I hope I'm wrong. Obviously, this guy's super smart. So, but I hope I'm wrong on that. But I'm just not. I don't think that the Fed cutting rates this is going to be this silver bullet to save the real estate market in the short term, at least. I think eventually we will see it turn around, though.
Think that there was more risk to a slowdown than to inflation? Do you think they missed that a little bit and they're fighting? I don't know, but Trump said you got to cut it, so they couldn't. Maybe they had to err that way just for political reasons.
Yeah, I think the Fed needs to demonstrate independence, but you're right. I think when they look at their dual mandate, they're probably drifting further from the employment metric now, because the unemployment rate, if you use the existing participation rate before this report, it's almost 5% now. So the Fed now has to be considering the risk of jobs market actually going into a cycle of weakening.
Right, but you have also been, I guess dovish is the word, on inflation. You have not thought that there is going to be necessarily a big impact from the tariff regime.
That's right. And I think the biggest takeaway is, first of all, if you look at the latest inflation report, the goods component that are tariff driven, it's been only mild. But also if you use the same inflation measure Europe uses, which is inflation X housing, we're actually under 2%. The Fed, if they were the ECB, would be cutting right now.
So that is really interesting. So I'm not ready to say that tariffs aren't going to cause any inflation. I have been talking about for months now how I don't think it's going to be nearly as bad as what people thought, because I think that the exporting countries are going to eat part of it. I think importing companies are going to be eating a lot of it. We saw that with Scott Besson earlier this year when he was interviewed with Tucker Carlson. He was talking about how when we put 20% tariffs on China in Trump's first presidency, they now have statistics through, I think it was the University of Michigan, or it might have been MIT, where it only caused about a one-time price increase of 0.7%. So, but I'm not willing to say here that hey, we're not going to see any inflation from tariffs, because I don't think we've seen all the impacts of them yet. In fact, there's a lot of companies in the last couple of weeks that are coming out saying that, hey, we're adjusting pricing because of tariffs. So I think we could still see some inflation from that, but I do think it's very likely going to be a one-time increase, and much less than people thought. And he talks about this dual mandate where, hey, the Fed, yeah, they have to choose between inflation and the job market. And if they don't cut rates soon, then it could be really, really bad for the job market. They really need to get aggressive with rate cuts. And I do agree with that completely.
That's interesting. So by the end of the year, or what target are you using now, and what time frame?
I think we're gonna rally pretty strongly in August. So I think we can get back to 65, or get to 65, 6,600 all-time highs in the next couple of weeks.
And then 7,000 in the next 12 months, above that?
Yeah, probably well above that.
Well above that.
Yeah.
BitMine, we mentioned that at the top, is going to be, in your view, the micro strategy or strategy of Ethereum or Ether.
Yes, that's right. Just a month ago, I was on the show to announce I was becoming chairman. And at the time, the stock was $4.50, and we announced a $250 million investment led by Founders Fund and Mosaics and others. But today, we announced that we reached almost $3 billion worth of ETH. And
the largest ETH holder then.
Yeah, the largest ETH treasury in the world, and the third largest crypto treasury in the world. And we also announced that Bill Miller III made a major investment last week into BitMine, so that he joins Cathie Woods in investing in our company in the past couple weeks.
That's the Bill Miller from like Mason we all know.
Yes,
Right?
that's right. The Bill
The
Miller
stock
that we
guy.
all know.
Yep.
Yes.
He was super early.
On crypto too.
No, that's what I was going.
Yeah.
I was saying super.
He was.
He was like, right? What was he getting Bitcoin at? 2012, 13?
Yeah,
He
he has it. He has some of the lowest cost Bitcoin out there.
What's your symbol? What it is Bitmine?
It's ticker BMNR. And the stock now is around 32. So
BMNR, so they are going to be basically the MicroStrategy of Ether. He is the chairman. Man, like they've got Kathy Wood, they've got this other guy that's mentioned who's a long-term Bitcoin holder. Ethereum is getting a ton of institutional interest, guys. Like I think that Ethereum can go a lot further from here. You know, this is something that earlier in the year, on one of our spaces, we had bold predictions, and one of mine was, hey, Ethereum's going to outperform Solana the rest of this year or the rest of the cycle because it's been beaten down so much. Everyone had given up on it, but it's like, guys, all these institutions are building on layer 2s, a lot on base, but those are all on Ethereum. Like the institutional interest in Ethereum is crazy, especially with staking now. I mean, it's going to be absolute insanity. And you see here, oh yeah, and he said he went to 30. It was at $4, up to $32 now on that. They're the largest Ethereum fund there. But Ethereum sitting at 36.64. Again, a lot of people are calling, well, once it hits 4,000 is when we'll see alt season start. I think in the long term, I think Ethereum will go much higher. I know a lot of people don't like Ethereum, but you know, you got to follow the money, and the institutional money has been what's driven this whole market cycle. It hasn't really been retail. We've seen a little bit of retail with like the meme coins and stuff. We had a little bit of a mini deep in alt season, but like, let's be real, a lot of it has been institutionally led. So you got to look at where these ETFs, where's the money going to flow through, and yeah, a lot of it is these ETFs. A lot of it is these treasury companies. So where you can get institutional access, that's where you need to be looking, and obviously that's what's performed the best to this point. I think DePIN is coming though, guys. Like, let's be real. I think DePIN will absolutely have its day, and it could be sooner than a lot of people realize. If we look on the day on the crypto bubbles, we've got a lot of green. Obviously, over the last week, things had corrected pretty hard. This is the top 100. If we look at, you know, the DePIN project for the last week, they were down. Over the last month, they performed very well. We had a tough week with the job reports and all that coming out, and then over to, you know, just today, we're seeing a nice bounce back, really across the board here. So, I remain incredibly bullish. We did mention that on the White House Digital Asset Report, DePIN was mentioned several times in there directly. And then today, you guys should check this out. Helium, Hivemapper, and Render were all interviewed on Nasdaq. This is freaking massive that we're getting this type of attention. I think, you know, when you look at the, you know, all the tailwinds that are being put in place right now, all the regulatory stuff that's opening up, like, we're not seeing all the money that's going to be coming from that. The stablecoin bill, for example, like, this is leading the way. A lot of people are buying that rumor, like, hey, money is going to be flowing in. It'll be something that we see over the coming years. You know, all the stuff that's happening right now. So we're really ahead of it. And I think when you start to see traditional TradFi investors come in, they're going to want something like DePIN where, hey, there's a real world use case being addressed. There's real revenue. There's real problems being solved. You can start to value these like you would other traditional investments. It's not just speculative. There's actual metrics to look at, and, you know, really disrupting, you know, existing Web 2 industries. And I think that is going to be where a lot of money flows. And I wouldn't be surprised if at some point we see, you know, a DePIN ETF. If Grayscale launches a you know, DePIN fund of some sort, would not at all surprise me. But it's great to see that we're getting recognition for sure. Speaking of Hivemapper, we've got, you know, honey is being burned through this 1 week period at 822,000 honey, burned 3.4 million in emissions. So still a long ways to go before this can become deflationary on a you know, new emission standpoint. Helium is getting really close to that happening. But I think it could happen. You also have to think, like, a lot of the emissions are out of the way now. I think the team unlocks are over at the end of this year. The investor unlocks already are out. So by the end of this year, we won't have any huge emissions. A lot of those tokens will be in circulation. So it'll really stabilize, because we saw over the last couple of years a lot of tokens go into circulation. That's one of the reasons why Honey's kind of had a hard time, I think. DIMO, they announced their subscription model. And if you want to see how people reacted, just look at the emojis down here. People are not happy. People are not happy. And I don't blame them. I think, DIMO did have, connectivity built in. So it's not a surprise that connectivity was going to end at some point. I think the hope, and even some of the interviews I did with their founders, the hope was that you could share your data and cover the cost of your connection. They didn't go that route. I talked to them at length. I thought the numbers worked to go that route. They decided not to, and that's them. Sometimes you got to remember, these are startups. You have to be able to pivot. Will they be successful in the pivot? I think they can. I think they have the team to do it. But I think that they are probably pissing off a lot of people in the Web3 community, especially people that have staked their tokens prior to knowing that this was coming. So I will say the pivot is going well. If you look at them selling on Amazon, they have great reviews, 4.7. They're a #1 bestseller. They've been selling a ton of devices. I've been reading through the reviews, and people are pretty happy with it. So I think this pivot's big. If they can get a bunch of cars connected, people that want to actually use it rather than just mine tokens, I think that'll bode well for them. They also announced a partnership today with SpotHero, which if you don't use SpotHero, if you're in any major city, it's a great app to rent parking spots, and you can get a 10% discount on parking through DIMO. So the partnerships are continuing to be announced. Like, they're making moves. I forget, they were meeting with a big group last week. They haven't released the official details, but I think this is a project that in the longer term could do quite well. I think the token could do quite well with the pivot they're making. But I think the short term, unfortunately, I think they pissed a lot of people off, and we could see some volatility in price action. Follow this guy, Osvaldo. Capo Fox. He's also got a YouTube channel. He does like a lot of unboxings and tutorials. Guy's pretty smart. He just posted about how the GEO-PULSE, if you have a GEO-PULSE, how you need to upgrade the firmware. So he's got some details on how to go about doing that if you have any questions. But he's a good voice in the space, guys. I highly recommend following him. We need more people that are out here. Like, what did he say? He said, CB said, I'm fortunate to find your channel. I appreciate your thorough and balanced analysis. It's hard to find that on YouTube. Seems like people are engaged in farming and spraying viewers with hopium or shilling projects. Yeah, I think, it's good to look at this holistically, because, and thanks for that feedback, by the way. But, when you look at crypto, like, yes, there's a lot of positive momentum taking place, but the macro still matters. And in the short term, we could still have some major volatility, but I think in the long term, things are setting up for crypto to make a massive run. And I would imagine over the course of Trump's presidency, crypto would do really well. Now, after the next presidency, they could change things. We don't know. But I do think if you're patient and you're willing to look out in a longer term time frame than just like the next 6 months, I think you'll be happy. But there's a lot of uncertainty in the short term for sure. Are they going to get screwed with ETH in the future? I don't know what that question was about. I think Ethereum is going to do well, man. Like, I think it's finally starting to look good, and I think it's getting a ton of investment. Like, I think the institutional eyes, like, they're looking. You're going to get to this point, and where Bitcoin gets to a certain price point this cycle, institutional money is going to want to come in and be like, hey, I think we kind of missed it on Bitcoin, but what's the next big thing coming? I think Ethereum's there. I think Solana, when spot ETFs get officially launched, you got to start looking at where these new spot ETFs, there's a list of them. I'll cover them this week. But there's a lot of spot ETFs that'll likely get past this year. And I think those are the ones that'll likely pump. And I think that the institutional money will flow to. WeatherXM came out and said that they have their Solana, because the Solana Seeker phone that's being shipped out, that WeatherXM is going to be the first weather app on the Solana Dapp store. So that's pretty freaking cool. Their team finally got back to me. I'm going to be interviewing them finally. I have a bunch of videos. I talk about WeatherXM all the time, but excited to get them on. They've got a lot of cool stuff taking place. You look at Dabba, more hotspots being installed. That's great news. They had their in a town hall last week. I'll put out a video really just breaking that down specifically, but as we get close to TGE, you're going to need to go on. You're going to need to choose your LCO, choose your location for your hotspot, etc. So they're going to have tutorials as well, but I plan on putting out some videos on it too to help people out as we get close to TGE. But very exciting stuff there. The TGE for Dabba is coming tomorrow, guys, 11 a.m. Central Time. I'm bringing Exabits on. Join it. Join that show. Exabits is something that nobody else is talking about. No YouTubers are talking about it. No people on X are talking. I don't know why. You need to, I highly recommend jumping in there. I'm bringing Mark Feidelman on there. He's their CMO. They're doing massive stuff. And I'm going to ask him when their token's launching. It should be this year. So if you can, join in. The guy, he's got some really good insight on where AI is headed, etc. So highly encourage you. And it will be recorded as well. I'll make sure that it's recorded because the one that I had with GeoNet somehow did not record. My only space ever that didn't. One other thing I want to touch on is 375 AI. This is my other monster that's coming up. The two token launches I'm most excited about, Exabits and 375 AI. I think both those projects are going to be massive in the DePIN space. But they have their testnet coming to an end. They announced their native token is going to be the Edge AI token, EAT. They said the snapshot for the airdrop will be taken in the next 2 months, followed closely by mainnet launch. So within the next 2 months, sounds like mainnet is coming. Says, as we accelerate towards mainnet, stay tuned for more information around the launch. And the EAT token opportunities to engage deeply with the 375 AI community. And next week, not this week, but next Tuesday, we are bringing Harry Dewhurst on the space to talk about 375 AI. Who said, hold on, let's see. We got some 140K ETH, send it. I think TradFi is among the same mistake as many of us who join the space with ETH. They will soon be BTC maxi soon. Maybe, man. I don't know. This is the first time. Like, think about all the stable coins that are going to be sent. Think about all the projects. I mean, I think just in general, stable coins are all that's being built on top of Ethereum. So we're going to see massive usage on the network. And Base is making some major moves on RWAs, guys. Actually, that's one thing I wanted to bring up is DIMO. I think we need to think about this for a minute. DIMO moved to Base. And I was like, why would they move to Base? And there's an interview with Rob, their CEO. And he's like, yeah, like it'd be great. Solana's cool. Like a lot of other DePIN projects are built on Solana, but Base is where the institutional interest is. That's where people are going to be tokenizing all their documentation. That's where these DMVs are going to be tokenizing everything. Like everything, all the RWA movement, a lot of it on the institutional side is going to be on likely Base and Ethereum. So for DIMO, they're going to be able to, use all your vehicle's data and tie it into all these different services, these Web 2 services that are all going to be built on top of Ethereum. So I think it was a really smart move for them. They're looking at, they've said this several times. They're like, we're not looking at this as a 1 or 2 year deal. We're looking at this as like a 10, 20, 30 year project. And so I think DIMO has legs, y'all. Like I do think in the longer term, they're going to pivot. I think they can do well. I wouldn't recommend setting up a huge fleet at this point because of the connection costs. But I like the token. So the first you're hearing about Dabba. Oh, really? Should we talk about Dabba as we close out here? Let's do it. I can't tell if you're being serious or not. Dabba Network is basically they're building out Wi-Fi infrastructure in India. So there's like 1.4 billion people in India the vast majority of which do not have access to Wi-Fi. So Dabba is working with local companies to deploy infrastructure for Wi-Fi. You as an investor can go to Dabba, you can buy hotspots, they get deployed for you, and you just earn tokens based on your deployments. But they're using crowdsourcing basically to help these local companies that, they have the means to install. Most of them have been like satellite install companies, but everyone's getting away from satellite TV. So they're pivoting now to working with Dabba to install Wi-Fi. But a lot of them don't have the capital to expand. Like they have a capital to expand slowly, but if they're bringing in through DePIN capital from all over the world. It's allowing them to expand a lot more quickly. So they have 18,000 hotspots sold. They have nearly 6,000 installed. And they're installing where the coverage is needed. So they're matching supply and demand. So I think Dabba has some serious legs. They've got some big investors too. Tether, Tether is on multiple chains. They have support on multiple chains. I don't think Tether is going to be the big winner here. I think like USDC is going to be. I think that a lot of these banks are going to launch their own stablecoins. Like JP Morgan is going to launch their own stablecoin. I think a lot of these banks are going to launch their own stablecoins. But USDC to me is like going to be the clear winner. Circle. So the problem with USDT is like, I don't know. I don't know they're going to comply with the US's requirements for stablecoins. We'll see. There's some shady stuff with USDT. Like if you go back to like I think it was 2021, and you read the lawsuit with the New York Attorney General, I believe it was. Like they had to prove they had a backing for all the USDT they had printed, and they were like shifting funds around like last minute to different bank accounts and shit. Like there's some weird stuff happening with USDT. Let's be real. I think USDT is bigger globally, but guys, this is going to change. Like if we go, let's just take a look at CoinMarketCap and see what the total. So let me share this this tab. So like let's just look at USDT. It is $163 billion is the total market cap. With the Genius bill getting passed, they're expecting that there's going to be at least $2 to $3 trillion in stablecoins brought online in the next couple of years. Like that, mathematically, it's 10 to 20 times what USDT is today. Like that's the amount that's going to be coming in through the stablecoin bill. That's what they're expecting, and that's what they need actually. I think because all of the stablecoins that are being issued are going to be buying up U.S. debt, U.S. treasuries. That's going to fund our debt. I think it's a big reason why they're pushing for this right now. But when you think about like that's going to be, I think stablecoins could eventually exceed or get close to the market cap of Bitcoin. We're nowhere near that now, but that's what this bill is going to do. So it's going to be massive. Dude, so there's a lot of reports about Tether not willing to comply with the U.S. requirements because they have to prove that they have backing, that they have assets to back the stablecoins they're making. And there's some weird stuff with USDT back in the day. Now they probably shored that up now, I think. But we'll see. Not too late. They should raise rates. Explain, because the job market is in the dumps right now. The revisions they have, things are going in the wrong direction. Are you saying because of inflation? You can make an argument for sure. But here's the deal: if they don't lower rates, I think, and maybe you can blame the tariffs for this, whatever. I think things were moving in a rough direction anyway. if they don't lower rates, I think we're gonna end up finding ourselves in a deeper recession. What's Canada going to do with their T-bills? I don't know. Canada's in a tough spot too. They have like 7% unemployment, man. For as much as they want to like say they don't need the U.S., like I see all these people going back and forth on X. People from Canada are like, screw the U.S., we don't need you, and the U.S. is like, we don't need you. It's like both sides really get hurt the longer this holds out. Like, we are neighboring countries. Makes sense to do trade, you know. Mark Carney was a finance guy. I know that. I mean, sure, but a very large percentage of the GDP of Canada is tied to the U.S. I mean, look, I am all for us getting something figured out with Canada. I think it would be in both countries' best interest. You know, and they can say it's all about fentanyl. They can say whatever. They can make whatever claim they want. But I do think that it is in both countries' best interest. But I like Carney. I think Carney's a sharp guy. I mean, he has a strong finance background. I think he was a good pick. And we'll see. I mean, Canada will start trying to trade with other countries. They'll trade more with Europe for sure. They'll probably trade more with China. I think they're already starting to do that. So, yeah, we'll see how it plays out for sure. But at the same time, like let's see what America's, Canada's bullshit. Get out of here, bro. You're a clown. That's not even anywhere near true. China, though, is dumping product into Europe and these other countries. I think that's a big reason why Europe is like wanting to get trade done with us, because they're like, hey, we're going to have to impose tariffs on China too if this continues. So I think Europe's going to get something figured out with us. And I think everything will end up getting settled, but I don't necessarily like the way that Trump goes about it. I'll say that much. I think, some people like it. I think there's better ways to go about it, but we'll see how it plays out. I do expect the Fed will drop rates in September. But that's not even a serious comment. That's like crazy. Oh, man. All right, guys. Well, that's what I got for y'all. I appreciate everybody that joined in today. Make sure to join the space tomorrow, 11 a.m. Central Standard Time. We'll be joined by Exabits. They're going to be a huge project, guys. They've got data centers they're building all over the world. They've got pretty much every other GPU project, whether it's Render, whether it's a cache network, IONet, Nosana, Aether. All of them are sourcing GPUs from Exabits. Okay, so they're going to be a massive project. So definitely join in on that, guys. And then the following week, 375 AI. I'm going to be heading back to Chicago probably tomorrow morning early. So if I should get on tomorrow. I should be back in my home studio. Appreciate you guys. Have a fantastic day.